Almost every country on Earth holds US dollars. But why does the entire world trust one country's currency? The answer shaped the modern global economy. From sprawling industrial powerhouses to small island nations, keeps a stash of US dollars. They are not merely saving for a rainy day, they are participating in a global financial system built layer by layer upon a single currency. But why does the entire world place its trust, its trade, and its economic stability in the hands of one country's money? This question is not just academic. The answer has shaped the modern global economy, dictated the fortunes of nations, and created a complex web of dependence that defines our interconnected world. It is a story of power, history, and a universal need for a reliable measure of value. The US dollar has become the world's most versatile and universally accepted financial instrument. When a Brazilian company wants to buy Japanese electronics, the transaction is often priced and settled in dollars. When a South African mining firm needs a loan to expand, it frequently borrows in dollars. This global consensus did not happen by accident. It is the result of historical events and deliberate policy choices and powerful network effects that cemented the dollar as the linchpin of world finance. Understanding it means looking beyond paper and ink. The dollar is a claim on the world's largest economy, a key to the deepest financial markets, and a shield against global volatility. For central bankers, holding dollars is strategic necessity. To grasp the dollar's present-day power, rewind to 1944. As World War II drew to a close, leaders from 44 Allied nations met in Bretton Woods. They designed a system to prevent the chaos that helped fuel war. They sought stability, predictability, and rebuilding. The US emerged industrially strong and held over 2/3 of the world's monetary gold. It was the economic heavyweight in the room. The agreement made the dollar the system's anchor. The US promised to convert dollars to gold at $35 per ounce. Other countries pegged to the dollar at fixed rates. Trade flourished. Dollars became central bank reserves. In 1971, Nixon ended gold convertibility. Many predicted collapse, yet network inertia kept the dollar dominant. What happens when a nation's dollars run dangerously low? The consequences are not abstract, they are nation-shaking. Like a household out of cash with bills due, imports seize up without dollars to pay overseas suppliers, fuel, medicine, industrial machinery, food, shortages and long queues follow. Dollar scarcity often triggers a currency crisis. Businesses and savers sell local currency to buy dollars, driving the local currency down. Prices skyrocket, hyperinflation. A loaf that cost 1 unit yesterday might cost 10 today and 100 tomorrow. Savings are destroyed. The middle class is hollowed out. Unrest spreads. Dollar debts become unpayable as currencies crash. A $1 million loan at 10-to-1 equals 10 million local, but at 100-to-1 it becomes 100 million. Bankruptcies, bank failures, and sovereign defaults cascade. The dollar's supremacy has long seemed unassailable, but the landscape shifts. China's yuan, renminbi, is the most significant long-term challenger. As the world's second-largest economy and largest trader, Beijing pushes yuan settlement, signs swap lines, and develops alternatives to SWIFT. BRICS nations discuss reducing dollar dependence, exploring shared systems, and even a reserve unit. Meanwhile, central banks buy gold at historic pace, diversification, and sovereignty. But the yuan faces strict capital controls, limited access curbs, reserve appeal. Reserve currencies must be freely traded and accessible. Gold cannot run day-to-day transactions. Unmatched liquidity, open markets, and institutional trust still favor the dollar. Any transition will be gradual and difficult. Other discussed options include the euro and the British pound. Gold offers stability but lacks liquidity and everyday payment rails. Bitcoin and cryptocurrencies are innovative yet volatile with limited adoption. These alternatives matter, but none currently replace the dollar's global role. The US dollar is more than a currency, it is global infrastructure. It powers trade, stores value, and shields economies from shocks. Born after World War II, solidified by network effects, sustained by the U.S. economy's scale and market depth. For most countries, holding dollars is pragmatic, survival and prosperity. It creates a common language for commerce, but concentrates power in Washington and exposes others to U.S. policy. Alternatives are rising: WAN, BRICS ideas, and gold accumulation. Yet no rival matches the dollar's liquidity, safety, and openness. Building equivalent trust and infrastructure would take decades. The dollar remains the bridge connecting the world's economies. Thanks for watching Wallet Economics. Subscribe to understand the system.